Craig, you have basically told us that the 2022 global IPO market has basically been an unmitigated disaster. Do you think that Porsche will make a better showing a little later today?
Look, I think Porsche may have a very good debut. The offering was many times oversubscribed. They had 40% of the IPO taken up by what are called cornerstones, so sovereign wealth funds and institutional investors who had come in before the IPO. And even about half of that were the Qatar Investment Authority. So there was a lot of demand for the IPO, but I don't think it says very much about the IPO market. This is a company that had already been listed once on the Frankfurt Stock Exchange. It's the source of most of the profits, or the plurality of the profits, for Volkswagen. And so it's an asset that investors already know. So it's a great accomplishment for Volkswagen and Porsche, but I don't think it is a harbinger of a lot more IPO activity to come. The markets remain very challenging for most issuers.
What about the valuation there, Craig? Because to me, I'm speaking for myself, this just seems like a company whose core product is a car for men in a midlife crisis. Is this something that, in your mind, reflects the valuation?
Look, investors the IPO to pretty strict scrutiny, and I think the IPO's valuation came out below where some of the talk had been a few months ago, in part because the markets have traded off. What I would say is that the IPO was priced at a premium to the other OEMs, the other original equipment manufacturers, but at a discount to some of the luxury names. Again, I think the IPO has commanded a tremendous amount of interest from investors. It was, as I understand it, many times oversubscribed, suggesting that the investors who took the time to model the company, to look at it carefully, like what they saw.
Craig, Sam joining the conversation here. I just want to ask you, in terms of characterizing this IPO, as you say, it's not really a hard company to take public, but what about the challenges moving forward, given that the headwinds that have already battered the market are likely to continue? And as far as the optics are concerned, this is a luxury brand IPOing at a time of a cost of living crisis.
A great question. I wrote in the Financial Times Alphaville column last week that this IPO is not going to be the gateway for a flood of new IPOs to come. The challenges remain. You're talking about broad-based indices that are down over 20% this year. You're talking about increasing inflation, economic slowdown, energy shortage, and so many other headwinds for the market right now. This IPO is really a sale of a minority interest, a small minority interest of 12.5%, of which 40% were taken up in advance by cornerstones. So although it's a great accomplishment for the people involved, for the companies involved, it isn't going to be providing much of a platform for this kinds of small and medium-sized growth companies that make up the bulk of the IPO pipeline.